Have you ever looked at these Amazon gurus flashing their screenshots and their high-level revenue and wondered, how much are these guys really making? Well, today's video is for you because I'm taking my brand that is less than 1 year old that I've been documenting with examples and case studies on this channel. I'm going to show you exactly what I made in the month of August. All the good, gory details from revenue, rebates, reimbursements, marketing costs and expenses, and ultimately how much money I made in August. It's gonna be good, guys. Let's go. I've built and led multiple seven-figure Amazon brands. Now I'm setting out to share how I did it with radically transparent and detailed weekly videos. Join the journey with me and break free. Welcome to Heist. All right, guys, welcome to Heist, the channel that is all things Amazon FBA, where we go beyond what normal gurus cover and look at deep dive content and show things that frankly no one else out there is showing. So I'm probably like you in the sense that when I first got into this game, I was very curious about what success was like. You know, who's successful, what does it mean, and how did they do it? Where you often hit a wall is a lot of people will share their frontline numbers. If they have a good launch, they'll share the good launch numbers. They've got a brand that's 3-4 years old that's putting up monster numbers. They'll flash that up there and allude to the fact that everybody can do it. But there's a lot of things that aren't a part of that don't go into the detail of what it actually takes, what does it mean, and when you peel the onion back, what really is the profitability of an Amazon business. So the example that I've been sharing a lot in my case studies, I'm kind of calling it my Heist channel brand, frankly. It's the business that I launched December 20th of last year, so this is still right around 8 months old now. I wanted to show as a real example like of a brand that's less than a year old, that's done 3 or 4 launches. I think I've put about 25 grand US into the brand as my out-of-pocket investment. Like a very tangible example that people can understand, that can look at, and that can, you know, aspire to be if they haven't had success yet, or even if you're an experienced seller, just to compare notes and see what other people are doing. So the point of today's video is to break down my August income statement. So an income statement goes over all of the revenue, all of the expenses, and the profit and loss that accumulates over a monthly period. So you can see in a month, when you take the high-level revenue that you get from, say, an Amazon screenshot, what does it mean for me in terms of money in my bank that I can either take out as earnings or I can reinvest back into the growth of the business. So I'm gonna hop into my computer. We're gonna start with my Xero account. So there's really 2 accounting softwares that I would recommend. QuickBooks is one and Xero is the other one, Xero. And I'm just gonna start showing the income statement there. And then I'm gonna show what my bookkeeper presents to me, which gives you some really cool percentages. And I'll let you know how I read my income statement on a monthly basis. What are the numbers I care about? What am I looking at? What do the numbers mean and tell me, specifically when we start looking at the percentage of expenses and percentage of revenue across different categories. So let's jump over to my computer. Alrighty, so this is my Xero account, and full disclaimer, the first thing that I outsource with any of my Amazon brands is bookkeeping. I hate doing it. It's kind of complicated. I'd rather huff glue to burn brain cells and actually do bookkeeping. So I suggest once you hit about $10,000 a month in revenue, it really makes sense and is relatively inexpensive versus the time that it would take you to learn it to bring on a bookkeeper. I personally use a company called MuseMinded. I will leave a link down below and talk about it a little bit later in terms of a deal that I've got for you guys. But they're fantastic, and their fees are oriented around what your revenue level is. So I think it's as low as $150 a month, and then it just kind of scales up from there depending on what revenue level you're at. So this is all data inputted by them. I just go in here to look at it. But this is what the Xero account looks like. When I want to look at income statements, I come over to here to accounting and then down to the income statement section. And I'm just going to look at last month, which was August. So when you pull it out, this is what it looks like. So you've basically got the reimbursements that come back from Amazon, sales, returns, any promotional discounts used, Shopify sales, which was a whopping $388. You can see I spent a lot of time on that. And then the total income or total net revenue. And then it comes down here and it's going to break down all of your Amazon costs, your cost of goods sold, all of the fees associated with selling on Amazon, and non-Amazon fulfillment costs. And then there's a gross profit number. Breaks down all of the operating expenses, which I'm going to get through in a second, and then the total net income. So this month, this brand brought in $21,214.42 of net income that I can then reinvest back in the business from a total net sales of just about $76,000. So this is a high-level view. This is basically what you would submit if you wanted financing. All of your year-end tax accounting and stuff like that would be based on a statement like this. But what MuseMinded does, and most good bookkeepers do, is they'll send you some ancillary information. And this is really what I look at on a monthly basis to evaluate the health of my business, to see how the month went, and to look forward on some things I can do to be better financially astute with my brands and businesses. Okay, so moving over from Xero accounting software, this is an example of a file, a Google Sheets file that I get emailed from my bookkeeper MuseMinded that gives me a little bit more detail, some percentages and some things that give me a little bit more insight as a business owner on where I need to be. And I'll focus on some of the numbers that I care about. I've also thrown in here July's numbers just so you can kind of see how some of the changes and movements within the financials have occurred even over the last month. July, it was a much less mature business than it was even in August. So as you have launches that your price slowly goes up, you're spending less on advertising. Once they hit about 4 months old, the numbers start to look a lot better from a net income profit loss statement at the SKU level. So the problem is if you've got a bunch of new SKUs, your numbers may not look quite as good from a profitability standpoint versus a bunch of mature SKUs where the profit's higher, things start to look cleaner. So this brand, as we went from July to August, mainly in marketing expense and some profitability, we've started to nudge up and it's looking a lot healthier, a lot more of what I would expect out of a brand as it starts to mature and starts to have a higher proportion of products that are 4 months plus old versus a bunch that are, within the first couple months of launch. So the first line item is going to be Amazon reimbursements. There's some really good software out there, Sellerize, which you guys know I recommend, as well as Helium 10. Links down below in the description if you guys don't have those softwares already. I've got a discount code for those. They have a lot of cool automated things that they will go out and notify you or seek reimbursements on your behalf. So there's some things you can do to optimize this, but this is basically money back. So let's say that a product wasn't shipped. And the customer said, hey, I never received it. Amazon's going to reimburse you for things like that. So the reimbursement line comes first. I kind of call it fake revenue, but it's basically kind of money back into the business, credit, so to speak. Sales is the big one, right? So this is what you would see within the app, within your Amazon account. A key thing here, and this is why sometimes these numbers are a little bit mismatched from what you've seen. From an accounting standpoint, and I use accrual-based accounting, which everybody should do versus cash. I'm not going to get into that on this video, but you're going to want to count what was actually shipped. So if you sold something, but Amazon is yet to ship it, you're not going to realize that revenue yet. So sometimes this shipped revenue versus actually sold revenue might be a little bit different. But that's the revenue line item. Returns is a big one, and this is something you definitely want to keep an eye on and analyze and predict. Before I launch a product, as part of my ROI calculations, I always try to anticipate what the return rate's going to be. It might be closer to 8% on electronics products, and other products you might expect it to be like 3%. So you definitely want to keep an eye on what is the return percentage and is that aligning with what you predicted, because it has a massive, massive impact on profitability. In this case, this one was about 5% this month, kind of coming down from last month. I'm launching less return-oriented products more with this brand. The first couple were a little bit heavier on returns because they had some electronic components to it. And then you basically have your net revenue. So this is kind of like the revenue that you can kind of count as your top line. Then I've got a couple things here on non-Amazon revenue for brands that I'm pushing a lot of external sales, even retail-oriented sales. We'll see a lot more in this element, but you can see here not crazy amounts of purchases on my Shopify site, but they calculate that. Coming down here, there's some shipping income. I actually don't even know what that is. It's probably return-oriented stuff that we get money back on shipping, but again, whopping amount there, probably from Shopify. Then we get into expenses, and this is what you want to keep a good look at. I think a lot of people on Amazon are going to be focused on this top-line sales number. Everyone kind of knows we all check in the morning when we wake up, even though we maybe shouldn't. We look at on a daily, weekly, monthly basis, like, hey, what are my sales coming in? It's the vanity metric. It's the most visible. It's the most real kind of directional metric that you can look at for the healthier business. But some of this other stuff is where some of the magic happens in terms of building a long-term brand of value that you can sell. Remember, when you sell an Amazon business, rarely are you getting valued based on your revenue. You are getting valued as a multiple of your net income, or what is your net profit on a monthly basis and over time. And the typical metric is somewhere between 2 and 3.5 times the past 12 months earnings. So think about it like every dollar more that you make, it's the equivalent of making about $3 when you go to sell your business. So this is where the money is. This is where the magic is, especially if you're looking to build a long-term sustainable brand and business and you're looking to exit and sell it at some point. So some of the costs here, you'll see COGS, which includes landed costs, all of your tariffs, shipping to Amazon to get it into an actual warehouse, and then any packaging and design costs that go into that. I like to see this number for healthy, mature brands around 30%. This kind of depends on what category you're in and things like that. But a general rule of thumb that I would recommend, if you're at 30% or below on your COGS as a percentage of your net revenue, you're in a good spot. So this one, we have a couple more points to go, but you'll kind of see here, we've slowly started to drift this down. I think it was probably more like 38% when we first launched the brand, because you're not able to command the same higher prices for your products when you don't have the review count. So as you get more reviews, as you get more mature, you started to build up some regular orders with your vendors. You can start to hit them up like, hey, look, I've now ordered 4,000 of these things from you, and this is my 4th order. Let's talk about a price negotiation. You can optimize tariffs, you can optimize packaging sizes. There's a lot of things that you can do over time to drive that number down. So you should expect to see this number, especially in the first year of a brand, slowly start to come down. And you want to be around that 30% mark. That's at least what I'm looking at. So we're in a good spot with this, given the age of the brand and the age of the ASINs that are part of it. Then there's the platform fees. This is all of the Amazon referral fees. This is Amazon FBA fees, storage, which a lot of people don't pay attention to or calculate in their ROI. And then any of the non-Amazon fulfillment costs that kind of crop up. So you'll see here, again, this is roughly, depending on the brand, going to be about 30% of your product costs. So if you kind of look at it from that, like 60% of all of my costs are going to be the product, as well as the fees associated with Amazon taking their cut, as well as fulfilling the product. So that's some mental math you kind of want to orient around to better understand the structure and mechanics of your business. Then there's some non-direct fees. These are more related to Shopify-oriented stuff, merchant fees. Those are obviously inconsequential now, but if I were making a heavy push to get, say, 15-20% of my sales from Shopify, we'd see these kind of crop up a lot more. So you have a total cost of sales and then a total gross profit. So you see here we're nudging a little bit in the right direction. Gross profit was almost 30 grand for the month, about 38%. Generally speaking, that's a good spot. I kind of want to be, somewhere between, mid 30s to low 40s is kind of a healthy metric for me, especially for a brand of this age. As you get a more mature brand, you can start to, scale your expenses. You can get way better negotiating power. You can likely sell for higher amounts on Amazon given review count. So you can expect it to be maybe in the upper 30s, 40s range. But this is a fantastic spot to be in for the age of this brand. Coming down here, there's going to be expenses. So if you are paying people or you have salaries, things like that, you'll start to see this crop up. All of my team, I've kind of tucked those expenses into some other brands for the time being, even though they're doing some stuff for this brand. So I'll start to filter them and proportion out some of those people expenses into this brand over time. So as you start to grow and build, hire people, maybe take a salary yourself, you're going to start to see some of the expenses hit here. So a big cost that go into this business, advertising is probably one of the bigger ones. You'll see here advertising and promotion. In this case for this brand, because it's Amazon centric, is basically Amazon pay-per-click. One of the key things that you'll see when we get to the very bottom of this is this brand made $10,000 more in August than it did in July. A major part of that is we've really started to sharpen up on the Amazon pay-per-click. I like to see sub 10% tacos, or I like to spend 10% or less. So this expense here on advertising promotions as a proportion of total. A lot of times when you're early in the game, you're having to rely heavily on pay-per-click. Your bids aren't quite optimized. You don't have everything dialed yet. It's going to be higher. So you can kind of see here, we really started to dial in our advertising costs as we matured this brand between July and August. It was a focus. That's kind of one of the next levers that we kind of hit into. So you'll see here, we were almost 20% tacos for the month of July for this brand versus 8% in the month of August. So turned some stuff on, optimized some bids, really started to kind of hone in on the profitable, long-term, scalable, sustainable keyword strategies that made sense for all the SKUs in this brand. So that was a huge win. That was, again, a deliberate focus that if you were not looking at these numbers, you may not have realized just looking at the daily ACoS or daily ad spend amount within Seller Central. Then coming down, another major expense for these brands is going to be software. So there's like Helium 10, there's like CANVA, which I use, Sellerize, which I use. This accounting software, Xero, costs some money. There's a whole bunch of mainly software-oriented products that go into managing an Amazon brand. So you'll see that in the cloud software tools. Computer expenses here. What did I buy? I think I might have actually bought a note. It's not an iPad, but it's like one of those things that's like almost like paper note thing, but it's electronic. So I bought that for this brand this month. And then there's some website services. That's mainly Shopify associated fees, monthly fees. So that's really small right now, 2% of total. The OpEx burn on these Amazon brands is super lean, which is why I love the model. Doesn't take a ton of regular operating expense or commitment or risk to run these Amazon businesses. Coming down here, this is accounting services. I think that they're being nice, and this will get bumped up to, I think, $350. I think Muse charges, if it's less than 30 grand, they'll charge you $149. Once you start creeping up beyond that, I think it's $350. Again, I'll leave a link down below on their services, as well as a discount code for 10% off. I love the guys. They're fantastic. They remove one of the biggest headaches for me and give me cool information like this that lets me manage my business. And at the end of the year, when I've got tax time, I pass all of these bookkeeping elements over to my tax accountant, and it's super easy and gets it done in a heartbeat, which is cool. And then there's all these other expenses, pretty nominal. Total OpEx here is about 10%. So I've got 30% going to product, 30% going to Amazon, and a lot of that is FBA management fees and things because you don't have to have a warehouse in an Amazon business. And then 10% is on OpEx. As you grow and scale and get a lot more revenue, you don't necessarily need a lot more people or a lot more software. So a cool thing about an Amazon brand, especially as you start to get north of $1 million, is the proportion of OpEx will go down and down and down. So over time, you might even see this sub 5%. So you can run super lean with these Amazon brands, and it gets even better the more that you grow. So the value of your business and the proportion of OpEx over time can get quite small, which is a cool part of the model. So there's my net income there. So you can kind of see a massive jump, mainly driven by focusing on tacos, or what is the advertising cost that I'm pumping into this business to get sales and get net earnings. So right around 28%, again, in a good spot, right? You'll see here, not even a month ago, it was less than 20. Even though it's only 1 month, it was much less mature in terms of the ASINs and the revenue or the review counts and things like that could charge for higher revenue. So we're right around 20%. That's pretty normal, right? You can expect a healthy Amazon business that's doing pretty good, that's, in the maturing stages, so they're kind of got out of those growing pains and it's not a lot of new ASINs, to be north of 20% net income. If you've got a wildly profitable business, you can sometimes see that creep into the 30s, which is an aspiration that you should certainly shoot for. But really, your mental gut check should be, hey, is this number over 20%? If it is, you're kind of in the money and in the sweet spot. So guys, I hope this was valuable. I've never seen anybody go through their income statement before. Maybe it exists. Post a link down below if you've seen it. But this kind of stuff will help you make decisions about your business. You are a business owner and operator. You're not an Amazon seller. It's a mindset shift. The things like this that maybe take 5-10 minutes a month can have a dramatic impact on how much money you bring into your business, how quickly you can grow, and ultimately the end game, if you decide to sell your brand, each dollar you put into this net income is going to 3x when you sell your brand. So it's super important stuff. It doesn't take a ton of time or energy, but if you're thoughtful about things and you look at these key categories and you bring on a key partner, which is really inexpensive, like Muse-minded, it can make a world of difference in terms of the success of your Amazon brand. Hope it was valuable, guys. We will see you on Monday for Mental Game Monday number 2, as well as regularly scheduled deep dive Amazon value bombs later next week. Love you guys. Hope all is well.